You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 6th day of April, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is reserved for members only and those who are taking our 1-week free trial. If you've never taken your 1-week free trial, simply go to mytradingiq.com, and at the very top of the page, there's a button that says free trial. It really is that simple. Now, at 11:30 a.m. Eastern, we close the live training room. We take a 30-minute break. We come back at 12 noon Eastern for this broadcast, which is not restricted to members only, not restricted to those taking the 1-week free trial. This broadcast is open to the public. That's anybody, anywhere on planet Earth with an internet-connected device. There are 2 different ways to join this broadcast. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast, complete the 30-second registration form, and you're done. What will happen going forward is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, that's the better way, simply because it gives you access to the question box, so you can ask questions and participate in the discussion. If you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live, we've got you covered. Just point the browser on your internet-connected device to our YouTube channel, which is easy to remember because you already know the youtube.com part. Just throw in a /CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. For those who are new to the world of CFRN, I encourage you to scroll back a little bit on the YouTube channel. Go back 6 weeks, 6 months, a year, 2 years. Anybody can say anything today and make it sound like the truth. But what were they saying 6 weeks ago, 6 months ago, a year ago, 2 years ago? I mean, we don't expect you to listen to every broadcast, but just scroll around. Pick some days at random. Just listen in for a little bit. You'll quickly discover that there's a thread of connectivity, a thread of continuity woven through each and every daily broadcast. YouTube.com/CFRN. Now, those of you that are tuning in today via the YouTube channel, you already know what the title of today's broadcast is. The stuff Wall Street doesn't want you to know. And we're going to talk about that in just a minute after we open with a word of prayer, as we do. Tomorrow, Good Friday, we won't be here. That's not what makes it Good Friday, but you know why it's Good Friday. And we're taking the day off. So market's going to be open tonight, so there'll be alerts coming out tonight. You can trade the London Open, but everything's going to shut down shortly after some very high impact news comes out tomorrow morning. It's a bit odd. You got to believe there's some nefarious reason behind all that, but hey, it is what it is. Okay. All right, today's scripture, Matthew 28:20. And I'm reading from the Message translation. Jesus, undeterred, went right ahead and gave his charge. God authorized and commanded me to commission you. Go out and train everyone you meet, far and near, in this way of life, marking them by baptism in the threefold name, Father, Son, and Holy Spirit. Then instruct them in the practice of all I have commanded you. I'll be with you as you do this, day after day after day, right up to the end of the age. That scripture sounds familiar. It's because it was yesterday's scripture as well, just a different translation. Now, as we approach Easter or Resurrection Sunday, it's important to understand we're not reading Grimm's fairy tales here. Easter is about real people, real places. This is history. You can even read the writings of Josephus, who was definitely not a follower of Christ, but he it's kind of like today's liberal media, right? But he documented historically everything that we read in the Bible today. The Church of the Holy Sepulchre in Jerusalem is believed by most scholars to mark the actual tomb of Jesus. The church was built in the 12th century AD on top of the ruins of the original church built around AD 326 by Roman Emperor Constantine. Why did Constantine pick this particular spot in Jerusalem? Because that's where Emperor Hadrian built a pagan temple to his gods around AD 135. And why did Hadrian build his temple in that spot? Because he wanted to cover up the very location where Christians claimed that their God, Jesus, defeated death. I love that history. It points to the real place back then where Easter happened, and the real places today where Easter is still happening. As Jesus later put it, and surely I am with you always to the very end of the age. Just like Jesus appeared in a real place to Mary, Peter, and John, he also is really present where we spend the minutes and seconds of our days. We are never alone in our homes, our offices, or morning commutes. The Jesus who defeated death is present to offer us eternal life. I encourage you today, take some time to acknowledge the presence of Jesus in your personal space. And thank God that Easter is more than another story. Easter is history. Easter is His story. Join me in a word of prayer. Heavenly Father, we come before you today, humbled by your grace and mercy. We thank you for the gift of your Son, Jesus Christ, who died on the cross for our sins and rose again on the third day, fulfilling the prophecy in Matthew 28:20, that he would be with us always, even to the end of the age. Pray, God, that you would give us the strength and courage to follow in Jesus' footsteps, to love others as he loved us, and to spread the good news of his resurrection to all who will listen. Help us to remember that no matter where we go or what we do, you are always with us, guiding us, leading us on the path of righteousness. May we find comfort in your presence and in the knowledge that we are never alone. We pray that your Spirit would fill us with wisdom and understanding, that we may be able to discern your will for our lives and follow it faithfully. May we always seek your guidance and trust in your love and mercy. It's in Jesus' name we believe and pray. Everybody said, Amen. Amen. Well, happy Thursday. I hope it is a good Thursday for you, whoever you are and wherever you are. Let me give you the numbers real quick from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 5.5 points. The NASDAQ is up 56 points. S&P 500 up 7.5. And the Russell 2000 up just over 1 point. Pretty quiet pre-holiday trade. That's to be expected. In the commodity basket, crude oil down a penny, trading 80.51 last. Gold down $7.40, trading 20.28 last. Silver up 5 cents, trading 25.08 last. In the Asian markets at the close, the Nikkei dropped 340 points, 1.25%. Shanghai up 7 cents, basically unchanged. The Hang Seng up 56 points. And in the European markets at the close, FTSE up 78, the DAX up 77, CAC up 8.5. One mover and shaker in that bunch was the FTSE, up just over 1%. So that gave us a mixed day in Asia. It was a green day for the UK. And so far, it's a mixed radio Thursday here in the US of A, with the Dow in the red, but only by 5 points. Now, I put out this morning some short alerts because that's what the chart in front of me told me to do. However, I also know something that you should know. U.S. markets typically rally into a holiday weekend. So, could there be some alerts this afternoon pointing north instead of south? Absolutely. Again, it will be based upon whatever the chart tells me. Let's take a real quick look at Logic 247. That's our 24/7 around the clock E-mini alert service. Now this alert was posted by Valerie at 8 a.m. Eastern this morning. We're in week 244. And over the last 244 weeks, we've issued 13,800 plus. We crossed that 13,800 mark this morning. Individual handcrafted alerts. The alerts are not so that you can just trade them without having to worry about learning how to trade, although I know some people do that. The day will come when they regret it, because every member right now has the opportunity to actually learn how to trade. We want you to become self-sufficient. You do not want to depend on somebody somewhere to tell you when to get in and when to get out for the rest of your life. That's not even really trading. The alerts are a training tool when used properly. When published, there's time built in to receive the alert, study the 30-minute chart, see the window of opportunity with your own eyes that the alert represents, and then you're prepared with your smaller time frame to actually trade the alert when price reaches the entry. Since the markets opened last Sunday night at 6 p.m. Eastern, as of 8 a.m. this morning, we had issued 40 alerts this week. 2 never triggered. We were all caught up until I put out some more alerts after Valerie posted the recap. And she'll update this afternoon and this evening. So we had 38 actionable alerts, of which 6, or 16%, would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders in their unlimited one-on-one mentoring sessions. Over the last 244 weeks, we've averaged 20% or less of the alerts being stopped out based on that risk profile. Never risk more on a trade than what the potential profit is in the trade. It's a cardinal rule that you don't ever want to break. Okay? All right. So that's where we stand. Logic 247. That will change this afternoon when Valerie updates the recap. And I will be putting out alerts tonight because the Globex markets will open tonight at 6 p.m. Eastern. But again, the U.S. markets are going to shut down tomorrow morning about 9 a.m. Eastern, I think, or 9:30. Bert sent us a calendar. It's in the discussion group, so just be careful tomorrow. Holiday trade can be very tricky. And again, I'll say, markets have a tendency, U.S. markets anyway, to rally into a holiday weekend. And Monday, in many other countries, just as we're taking Good Friday off, in many countries, Monday is a holiday. So the U.S. will kind of be standing alone. So Monday may be a bit of a quiet day as well. Well, we'll see what happens when it gets here. Okay. So that's the Logic 247 alerts. They are based on current price action. Our original alert service, concierge trade alerts, they're a little bit different in a couple different ways. Number one, they're based on historic price action. When historic price action meets current price action, That is where you'll find some of your best high probability, low risk trade opportunities. That's kind of what separates us from the gamblers or the gambling mentality. We all want to just sit down and click the mouse and make some money. But depending upon when you sit down and what markets you watch, or stocks or crypto or Forex, there may not be a valid high probability, low risk opportunity. So you need patience and self-discipline. And we'll help you with that too in your unlimited one-on-one mentoring sessions. Now, for the last couple nights, I managed to get the alerts, the CTAs out by 6:35, 2 nights in a row. Last night I was running a little behind, got them out at 7:05 p.m. It didn't really matter because the markets were pretty quiet off the open. Now, we cover the same markets with the CTAs as we do with the logic alerts. But it's not a one or the other type situation. The two work hand in hand, or like a hand in a glove. One supports the other. Now, let's just use the ES as an example. What would you do if you were a member or a trial member and you got this report last night at 7:05 p.m.? First thing you would do is make a note on your 30-minute chart where price is at this time. It's always going to be between these two numbers. So once you've noted where price is at this time, then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street, so you're not selling when the market's rallying and vice versa. Now, because this broadcast is open to the public, there will be those watching this now or after the fact who did not receive these numbers or this report last night at 7:05 p.m. Eastern. So I want you to feel free to take a screenshot, because we will walk through each and every one of these markets after we talk for just a minute about the stuff Wall Street doesn't want you, the retail trader, to know. Wall Street is the hub of the global financial system. Every day when we go over the charts, you hear me talk about the institutional traders and the fact that they are the ones that move price, because their accounts are denominated in hundreds of millions and billions of dollars, whereas the typical retail trader has an account denominated in thousands or tens of thousands of dollars. So even though Wall Street views us as simply liquidity for their big trades, that's okay. Our strategy and indicators are not designed to outsmart the market or beat the market. It's not some kind of crystal ball. You will learn how to read a chart like a newspaper or a good mystery novel. While no one, not man nor machine nor algorithm, knows what's going to happen next in the market, you can, with a high degree of probability, know what the next high probability move is. That's how I can stand here and say that we have issued over 13,800 individual handcrafted Logic 247 alerts, and we've averaged over 244 weeks, 20% or less of those getting stopped out. So while you can't know for sure what's going to happen next, you can know with certainty what the next high probability move is, because everything we do is built on logic. First time you look at a chart, it looks pretty chaotic. Doesn't make a lot of sense. But we're going to help you understand what the chart is telling you, and then by simply applying logic, you know with a high degree of probability what's most likely to happen next. 20% of the time, at the most, probably going to do something else. That's the truth about trading. So again, back to Wall Street, the hub of the global financial system, where the world's biggest banks, investment firms, and hedge funds operate. It's a place where fortunes are made and lost in a matter of seconds, and where the most sophisticated financial products and strategies are developed. However, Wall Street has a dark side, and there are many things that it doesn't want retail traders to know. One of the most significant things that Wall Street doesn't want retail traders to know is the extent to which they manipulate the markets. Wall Street firms have access to vast amounts of information and resources that allow them to influence the direction of the markets. We talk about this every day when we go to the daily chart. They can use their knowledge to manipulate stock prices, futures contracts, and options, making huge profits in the process. Another thing that Wall Street doesn't want retail traders to know is to the extent to which they are at a disadvantage. Wall Street firms have access to the latest technology, the best research, and the most talented traders. Retail traders, on the other hand, are often trading from their homes, sometimes using outdated technology and relying on their own research. As a result, they are at a significant disadvantage when it comes to making profitable trades. This is why we don't try to beat Wall Street or outsmart the market. No, our indicators and the way we read price action isn't so we can outsmart them and outrun them because our pockets aren't that deep. We just want to clearly understand what they are doing so that we can do the same thing just long enough to get our goal for the day. And then put the mouse away. Wall Street also doesn't want retail traders to know about the risks involved in trading. Many retail traders believe that they can get rich quick by trading stocks or options, but the reality is that trading is a high-risk activity that can lead to significant losses. Wall Street firms have risk management strategies in place to protect themselves from losses, but retail traders often don't have the knowledge or resources to manage their risks effectively. That's why in the live trading room every day, and when we trade live during this broadcast at 1 p.m. Eastern on TradingView, Michael is teaching you what we call aggressive risk management. Finally, Wall Street doesn't want retail traders to know that they can be successful without trading. There are many other ways to invest and build wealth, such as real estate, starting a business, mutual funds. Wall Street firms make their money by trading, so they have a vested interest in promoting trading as the best way to invest. However, retail traders should explore all their options and find the investment strategy that works best for them. You're wondering, isn't this a broadcast about trading? It is. You see, 9 out of 10 new traders fail for reasons I just explained. And that's a pretty drastic number. However, if 9 out of 10 fail, then that means 1 out of 10 succeeds. When you find that one that does succeed, ask them one question. When you got started, did you have a teacher? They're going to look at you and go, well, yeah. How else would I learn how to do the job? It's so many traders because of the low barrier to entry. I mean, a few $1,000s, hey, you're a trader for about a day. You blow up that account and you got to send another wire to Chicago or wherever you send your wires. In conclusion, Wall Street has many secrets that it doesn't want retail traders to know. Retail traders should educate themselves about the risks involved in trading, the advantages that Wall Street firms have, and the alternatives to trading. By doing so, they can make informed decisions about their investments and build long-term wealth. And that is the very core of what we try to teach each and every one of our members every trading day for 2 hours in the live training room, then in the afternoon broadcast, in their unlimited one-on-one mentoring sessions, and their around-the-clock support via Telegram. So with that said, can't say nobody ever warned you. Never warned you, because I just did. Okay, that daily chart. I've already said a lot of what I normally say, so I'm going to skip that because Michael will be joining us here in about 10 minutes. That bearish engulfing candle, okay? It pushed price down all the way to 40.96.5. Didn't quite make it to the 24. Now, we started out down, but we got that holiday historical rally kind of thing kicking in, because now we're back up literally to the high of the session. That doesn't negate this, okay? The only way this bearish engulfing candle gets negated is if price closes above it in coming days. We've already traded through the step line in blue and climbing. Our next area for support is the 24% fib retracement and the BBC, and the top of this price channel that I drew in last week or week before, whenever it was. Now, we had two things going on when this bearish engulfing candle happened. Stefan had shared a trend line in the discussion group, which I put on this chart because many of you don't have access to our trading community. We have a very vibrant community. Trading can be a lonely business, but you never have to trade alone again. There's always somebody available to help you, answer your questions, whatever you need. So, bearish engulfing, the market drops as we expect. Historical rally kicks in, as it does. We'll see where we close today, where we open tonight, and where we're at after that high impact news tomorrow morning. If you're trying to trade that news tomorrow morning, I'm just going to encourage you to resist the urge. Go hide the eggs. Okay? All right. ES 30-minute chart. The vertical line separates today, Thursday, from Wednesday, from Tuesday. On Tuesday, we drew in a window of opportunity. It didn't get filled till yesterday. Here's where the markets opened last night. Okay? It would be on this candle right here when the alerts came out. 7:05 p.m. Eastern. Price is below the VBC. You've got red and falling. All you had to do was get short. And even though you didn't reach the target on that move, you had plenty of room to get your goal today. Price then got above the VBC, made a run up to the weekly trading zone, pulled back to the VBC. The pullback holds more often than not. Ran up to the zone again, where we found resistance. That's what we expect. When price drops to a zone, we expect support. When price rallies up to a zone, there, and there, we expect resistance. Eventually, it will probably break through as it has done here. So not only did we hit the short target multiple times, you see after we hit the short target here and the zone, we bounced back up to the VBC, pullback held, and down we come to the target again. Now we've gotten above all the resistance, including the zone, including this swing high. Have we cleared these highs? We have. So is it likely that we'll hit this long target during today's broadcast? I think so. The Dow. Here's where we opened last night. And the Dow's been the outlier all week. We come up, we hit the zone, resistance, drop to the zone, support, hit the short target. Now we're heading back up to the zone. Before price can hit the long target, it's got to overcome the zone, these highs, and this high right here. Now these zones you're looking at that are giving us beautiful resistance and support areas, these were published Monday morning at 6:15 a.m. Eastern for our members and our free trial members. They had this information Monday morning at 6:15 a.m. Eastern. We've published the zone since December 14th of 2009. So we have well over a decade of data on how price behaves at a weekly trading zone. You know what's changed over all these years? Absolutely nothing. On the NQ, here's where we opened last night. As soon as blue and climbing turned to red and falling, you're thinking short. That's lots of room to get your goal for the day, and then some. We didn't quite make the target on that move. We got a little head fake here, okay, but we ran into previously established resistance, which sent us back below the BBC, down to the target, almost to the zone, and another little head fake, this time down to the target and down to the zone where the market found support. We spiked it, but we closed this 30-minute candle above the zone. Only three things happen at a zone. 70% of the time it's going to be consolidation. 20% of the time it's going to be rejection. When that candle closed, the only thing left touching the zone was the wick, just like up here. And then 10% of the time we get what's called the slice. That's when price slices through a zone like it's not even there on the 30-minute chart. See how this candle sliced through? But when it ran out of steam, it retraced to the zone it sliced through and then continued in the direction of the slice. There are so many variables, so many possibilities in the financial markets. To be able to nail anything down to one of three things, that's powerful. Once you understand how price behaves around a weekly zone, how it's drawn to them, okay, they will become one of the most important tools in your trading toolbox. And as a lifetime member, no recurring fees, no upsells, no nonsense, you'll have lifetime access to the zones every Monday morning at 6:15 a.m. Eastern. So what are we doing? Consolidating at the zone 70% of the time. Crude oil, kind of a sleeper. We opened, came right down, hit the target, pulled back to the BBC, hit the target again. We attempted the long target, plenty of room to get your goal for the day there. Then we made another run at the short target. And now we're right at the BBC with red and falling overhead. So what would I expect to happen from here? The high probability move is down. I don't have crystal balls. I'm simply applying logic to what the chart is showing me right here, right now. Goal, market open, ran right to the target. Little head fake above the BBC, then back down to the target again. Didn't make it all the way to the zone. Came close. Zones are an area, like fibs. We've now pulled back to the BBC. The pullback holds more often than not, turning a red candle. But red and falling has now gotten directly below price, so that may serve as support if this red candle continues down. Silver, market open, drop to the target. That same head fake to the upside, back down to the target. Now we're above the BBC. We have blue and climbing. And what are we attempting? The long target. In order to get there, though, we got to take out this swing high. And last, euro. Euro open, drop. Missed just the target by a tick or two. Again here. Now it's rallying, and probably before the show ends, we may just see that little target. Now, I've run over my allotted time. No, I haven't. I still got 1 minute to go. Michael, are you ready? I was rushing. Michael. Now, 1 o'clock. First, Michael's going to give us a recap of what happened in the live training room this morning. We're going to walk you through all the charts, just like I walked you through the 30-minute charts. He's going to walk you through the smaller time frames where you actually execute the trade based upon the window of opportunity that you see on the 30-minute chart, which is represented by the alerts in the Logic 247 channel. Let me see if he's having trouble logging in. I think he is. Let me shoot him a message. All right, that should get him here momentarily. A couple headlines. What do we got? European stocks close higher as investors set positions ahead of Easter break. See, even in Europe, historic rally. Okay. Gold slides as investors digest jobs data. Looking ahead to Friday's jobs report. Crude heads for third weekly gain after shock OPEC cuts. Now, we haven't talked a lot on the broadcast here because our time is limited about the dollar potentially no longer being the world's reserve currency. Now, we've been talking about that fact since 2005 when CFRN first broke the airwaves. Now, a lot of other people are talking about it. China and Russia have hatched a deal with Iran to trade oil in the ruble, the yuan. Even the French have got in on this deal. The rule has always been that crude would be traded, well, not always, thank Nixon, that crude would always be traded in the US dollar. Now, my godson, little D, last night he didn't understand what the world reserve currency really meant. I said, did you know that every airplane you get on, no matter what country you're in, no matter where you're flying, that all pilots speak to the tower in English? I didn't know that. Well, it's kind of the same with the dollar. Now, our current administration made a huge mistake when they froze Russia's U.S. currency. Now, we saw the previous administration impose sanctions on China, and that worked. But when you tell somebody that those dollars, U.S. dollars you have in your bank account, freezing them, how would you feel if you went down to the bank to draw out a little money for the weekend, and you go, government's frozen your account? Those are words you never want to hear. And sadly, that could be on the horizon for many of us. Question from Dane on the ES. If today's candle were to engulf yesterday's candle, would that negate the bearish engulfing candle from 2 days ago? No, because the context would not be proper. The bearish engulfing candle needs to have a sustained uptrend. Otherwise, it's just a continuation signal. So that is a great question, though. Would it negate it? Because of the context, I'm going to say no. But we have to embrace all possibilities.
I'm here.
Ah, he's here. Man of the
I'm
hour.
here.
All right. Take it away.
Okay, sorry. A
Please.
little crisis on the front.
You okay?
Yeah.
If you need
Yeah,
me,
well, I don't know.
you
I'll
need me
find
to, you need me to do something, or?
No, it's out of my hands right now. Hopefully today we'll get a result though.
All right, bud.
Some dude, Jake's college and stuff.
Okay. 10-4.
Okay.
It's all yours.
So
Looks good.
got it. All right, here we go. Good afternoon, everyone. Today is Thursday, the 6th day of April, 2023. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, and right here it says sign up for your free 5-day training, 9:30 to 11:30. When you click on that, you're going to be sent all the information you need. Well, you got to fill out a little form first, and then you're going to be sent all the information that you need to get into the room in the morning session. Now, when you do that, you should download. If you have not downloaded DT Pro or NinjaTrader and you want to download DT Pro and NinjaTrader, you should go ahead and do that. Now, DT Pro, I'm going to show you a little bit of in here, and DT Pro is what I do my trading on. But I'm going to show you the majority of TradingView right here. Okay. And I want to show you something else today too that you may or may not know about TradingView. It's how to sign up for the data for TradingView. The data for TradingView is unbelievably inexpensive compared to some other places that charge you a lot of money for data. Over the years, I paid hundreds and hundreds of dollars for the same data that you get for $5 from TradingView. So that said, if you sign up for TradingView, you just need to give us your username, and we'll get you going with TradingView right away. Okay, now the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 6th day of April, 2023. We made 82 ticks in the NQ, 6 ticks in crude, -8 ticks in gold, and made plus 28 ticks on the ES. Put us at plus 740 overall with one contract this morning. Today, with 4 contracts on, it took 3 minutes and 2 trades to get to $1,180. And we took a total of 13 trades this morning. Let's see what a difference 4 contracts makes. That's where you want to be, slowly adding your way up, working your way up to multiple contracts. So on the month now, we're at $2,457. That's over 4 trading days, averaging $614 per contract per 2-hour trading day. On the year now, we've gone our goal in 65 out of 66 days, and we've gone 35 consecutive days since our last blue day. We've gone 413 consecutive days since our last red day. Those are business days, by the way. So that puts us at $34,610 on the year with 1 contract, 2 hours a day, averaging $524. Now, this is where you want to be. You don't want to be trading all day long. You don't even want to trade 2 hours a day. If you quit trading when you get your goal and you add 1 contract per month, like I did in the room, so far this year, you would have only had to work 15.53 hours, and you would have averaged $1,277 per hour so far in the year. And this number is going to grow quickly as we get into more contracts. It's starting to get 5, 6, 7, 8, 9, 10 contracts. That number is going to grow a lot every day. As long as I get my goal every day, but making the assumption that I will get my goal every day, that number will keep growing. All right, so let me see. There was a question here on the ES. If today's candle were to engulf yesterday's candle, would that negate the bearish engulfing from 2 days ago? That's a question for Dwayne in a few minutes. Dane? Okay. All right, so that's a spreadsheet. Now, I showed you how to get in there, how to do that. Let's get this. The one thing I want to show you is this. To sign up for the data, all right, from TradingView, it's only $5 to get the data that we need for this. To get data for ICE, that gets expensive. You start paying $120 or something like that per month for data. But for the data that we use for the CME group, the data that we use for the charts that we're showing right now, all you need to do is go here. Wait, Steven, are you listening? Just want to make sure. I said I was going to ask you that. You didn't type in you were listening. Okay, well, I'm going to go through it anyway. Really? Okay, good. Okay, so you go here to profile, you go here to this thing. On yours, I think it's got an S over here, but go up there to that, go to this, then go to account and billing. Account and billing. All right. Now I'm gonna do it on another one. I'm gonna bring up a TradingView over here. Okay, and I'll do it on this one, so it doesn't throw me off. In here, you go to the same thing, account and billing. And in here, tucked away in account and billing, there is a thing right here that said add extra market data. It's right here. Okay. So you're going to be able to go in here and you're going to have some things in here, like you might not have this on there. That's our monthly plan. Add extra market data. Click on that. Okay. When you click on that, it's going to bring you in here. The only thing you need to do is this one right here, the CME group. Okay. Check that. It's $5 a month. Click on next. It's going to ask you a myriad of questions to make sure that you're not a professional trader. And if you are a professional trader, it's going to cost more than $5 a month, but you're still going to have to answer all the questions. Okay. But basically, they're just saying, are you a professional trader? They're going to ask you about 6 questions. You're going to have to check a whole bunch of boxes that says no. And then you get data for all the markets that we have, real-time data for $5. Okay. So anybody that's using TradingView, if you don't know that, that's how you do it. It costs $5 to get the data, real-time data. Okay. Good. Everybody got that? I'll go through it one more time, really slow. You go here to whatever your symbol is over here. Ours is the passport. Go to accounts and billing. And in accounts and billing, scroll down a little bit. It's going to have this thing that says add extra market data. Click on that. Choose the CME group right here. Okay, we already pay for all this stuff. That's why it's not available to us. Choose the CME group right here. It's $5 a month. If you want to get the ICE, if you use stuff like the softs and things like that, then you're gonna have to pay that for the ICE. But we don't use that. This is what we use right here. Okay, so you have to do, click on that, click next, go through the next steps. That's all you have to do. All right. So I now have 4 minutes. I have 4 minutes now to get to the get through the next step here that I got to do. Hold on, let me let me open this up and this up and get to this before it's too late. I can't get to it. All right. So I went through the spreadsheet with you already. I'll go through the things that we did. Like on crude oil, we only had 1 trade today. We made 6 ticks. So I'll skip the crude one. On gold, we stopped out. Gold was the one where we stopped out today. So I'll go through that one in detail. All right. In the gold, we did start out okay. Our first trade in the gold, we did not start out okay. Is this today? Yeah, this is today. Yeah, we did okay. We started out with a stop out on gold. Here it is, right here. Did not start out okay. We started out with a stop out on gold. We were -10. Then we picked up a couple of ticks here to put us at -8. Then we picked up 10 ticks here to put us at +2. And then we stopped out right here to put us at -8 again. Right, and that's where we ended it with gold. Now, during the break, there really wasn't much happening. You can see the long-term trend was not showing all that much right there. So really not much to go on during the break. That was gold. Crude oil, I said we just had the 1 trade. And we had +6 ticks on that. And Steven, did you get all that? Okay, if you didn't, then we can work something else out after. Okay. Now on the ES, we had some trades today on the ES. Not a ton of them, but this is most of them right here. This is just about all of it right here. Our first trade on the ES, we picked up 18 ticks. I think that is where we got our goal, and I think a lot of the guys in the room got their goal for the day with me on that one. Okay, so I picked up 18 ticks on that, and then the next one I picked up 4 more to get me to 22. The one after that I picked up 2 more to get me to 24, and the one after that I picked up 4 more to get me to 28. That was all the trading I did on the ES. Doesn't mean it's all the trading there was, but it's all the trading I did. You can see during the break here, there were some really nice trade opportunities. Every one of those trades would have worked out, except this last one. This last one would have. But I wouldn't have taken this one because this one didn't put in a higher swing, but I definitely would have taken this one here at the beginning, which would have given both of those. This one here, which would have given some profit. This is a ribbon trade right here. You could have taken this as well, but it didn't really put in a higher swing, so I would have skipped that. This one here I would have taken. This one here I would have taken, didn't put in a higher swing, so I would have skipped that. And this one right here I would have taken and just stopped up. That is what the ES was like today. Okay, and the NQ. The NQ. Go back to the beginning. The NQ, we almost got our goal for the day on the very first trade on the NQ. Okay, I'm scrolling all the way back here to the very beginning. Look at all that flat spot right there. We didn't trade it all. I believe this was our first trade right here. It was. On that first trade, we picked up 14 ticks. Okay, and then we didn't trade for a while in here because everything flattened out. It started to move up in here and it was going well. And we still didn't trade for a while until, wow, I really didn't trade for a while, until all the way over here. I picked up 30 ticks on this one to get us to 44. Then 30 more ticks on the next one to get us to 74. And then 8 ticks on some last one here. I didn't write down. 8 ticks on some other one in here. That got us up to 82. Okay. And that was it for the morning session. I think this might have been the one that we got, or one of these in here. One of these in here is what we got. It was right here. So this was probably the 8. This was a 30. Maybe this was a 30. This was a 30, and that was the 8. Something like that. Anyway, the way it all worked out, we ended up with 82 ticks on the NQ. Okay, and it doesn't look like there was a ton going on here during the break. It said, but this isn't highest probability trade right here because after you change directions up here with your long-term direction, I like to see it pull all the way back up and get into the ribbon. I mean, it's working out. If you took this trade, it's working out. Look for this to get down into the oversold and then look to get out of the trade, right? After the long-term direction changes, like it did right here, I like to look for it to give us a deeper pull back into the ribbon and then a good bounce off of that. All right. Okay. Now, I'm going to jump into the live stream now, but it's time to do the live stream. So if you've not taken a free trial with us here, go to mytradingiq.com right here, sign up for the free trial right here, and download the trading platform, or just sign up for the trading platform. Okay, the trade rules are right in here. Everything that I'm going to go through right now in this live stream that I'm going to go through right now, they're all right in here. Okay, if anybody has any questions, you can email us at support@cfrn.net or support@mytradingiq.com.
I don't see you in the upcoming streams, buddy.
Yeah, you wouldn't be in the upcoming streams. It's going to be in the live streams right now. As soon as I go live, here it is.
Okay.
That is share. Okay, and we'll go over here and put the charts up and start stream. It's going to go right into the live right now, I think, Dwayne, once it starts.
Okay.
Yeah, there it is.
Looking for it.
Live streams. All right. Well, here we go. We are live right now. Anyway,
yep, I see it now.
The live stream is going. Good. All right, so what we're looking for in here right now on the NQ, as I just said, this is the first arrow after the long-term trend change right here. I'd be looking for a pull back up into the ribbon and then a push off of that. And I see the ES is starting to change here as well with this NQ change. I'd really like to see that happen. The gold right here is just going a little bit sideways. Now, I was looking at the larger picture stuff this morning, and most all the things this week that we're using with the weekly trading zones and larger picture things were happening pretty well. Meaning the targets that were available to us with all those other weekly trading zones and the midpoints between the zones, they were all coming together pretty well, pretty nicely, as we expect they will every week. So let me slow down for a second and say, if you're in here and you're on the live stream, all these indicators are available to you if you take a free trial with us. You can do that at mytradingiq.com. Right now we're setting up for a short trade here on the NQ. Let me just get over there to the NQ. And we'd be looking for a down close. Now the down close is going to be 4 points and a tick below the top of the bar. So 30.25 down to 29.25 down to 29 even is what you would sell. And you can do that ahead of time because this is a 16 tick range bar. So I know what the top is, I know the bottom's going to be. So I'll sell stop limit to be 1 tick below where the bottom is going to be. Okay, now this just changed, so the top is changing. So it's going to be 34 down to 30. Okay, so my sell stop is going to be right here. That is 4 points down from the top of the bar, plus 1 tick is right. That's right here. That's what I mean to be. Okay, so that's what we're looking for now. Actually, this ends up being here now. So if we get a down close on this bar, it's going to trigger us into the trade. And it doesn't matter if we get the arrow on this one or not this time because we're in the ribbon right now. Okay, so that number at the top of the bar keeps changing. So the bottom of the bar keeps changing just a little bit. Okay, so now the top is all the way up here, 36.25. So you're going to be looking at 32 now. 36.25 minus 4 is 32.25. Minus 1 more is right there. So the bar is going to close down at 32.25 and trigger me in here at 32. Like that. Okay. And so now it's the stop placement, the risk management of this is automatic right now. It's going to bump the stop to break even after I hit 8 ticks in profit. And it also throws a 30 tick target on it. So it's just going to get down to here right now. If it gets down there, it's going to bump the stop to break even. Okay. Now because this is the 16 tick range bar, the stop is 20 ticks away. It's up here automatically. Okay, that's my bracket. So what I'm looking for right now is just for this to push down a little bit more. Now it should get all the way down here to 21.25. I believe my 30 tick target is before that. It is right there. Okay, so if this stops us out, it stops us out. But this is what we're looking for in here. Okay. Stephen S., were you able to get all that information that I gave a little while ago? How to sign up for the data. Okay, this looks like it's probably going to stop me out. I know I've had a couple of them that were acting like that today, but then they ended up giving me everything we wanted. They ended up turning right around and giving us 30 ticks. All right. We don't have anything else that's giving us any trades here. So this, when you look at, let me go here. The risk is here. Okay, this is the risk. So if we go here to the trade rules, there are 3 parts to every trade, right? There's the entry, which we did perfectly. The risk management, which we are waiting on to do right now. The risk management, the beginning of it is having the stop in the right place. So that I did the risk management perfectly on this one. The stop was right in the right place. It stopped me out, but that's okay. That's part of trading. So I did the risk management perfectly and the exit. Now in this case, the exit was part of the risk management. Now if it would have gone 8 ticks into profit, it would have bumped that stop to break even for me automatically. And I usually do that stuff manually, but because the NQ moves so fast, I have it do it automatically. And then I can work on the exit. After I get that stop to break even, the risk management part is done. Then it's all about the exit. Okay, so let's go back here and we'll put the thing on here. Now we stopped out on that trade, and that's okay. Oh, great, Stephen. Great. And that's okay. So we stopped out on this one. So we are minus 20 ticks right now on the NQ, which is really no big deal considering this morning, in the room this morning, we're plus 82 on the NQ. So stopping out right there is not that big of a deal, and it happens. If you think you're not going to get stopped out, well, or if you're going to quit as soon as you get stopped out, you might as well just save yourself some time and money and don't start. Everybody gets stopped out. All right, so now we just have to wait. So while we're waiting, what we're doing in here is just a part of our whole package. We have longer term stuff that we do as well. If you go out to mytradingiq.com, you'll be able to sign up for the trial, and then you'll be able to see and learn about the longer term stuff. Dwayne, before this meeting started, we have a session that starts at noon, and Dwayne was on before that session started at noon for 45 minutes talking about the longer term stuff that we do every day. Logic 247 and the concierge trade alerts. That's all in addition to this. Right, so the full package is available to you. We just don't have any trades right here right now. This was the closest thing we had to a trade, and it almost went enough to get my stop to break even. I think it came within a tick of bumping my stop to break even. It had to get down to 30. It went to 30.25. Well, it is what it is. We're just gonna have to wait until the end of this session to We're gonna have to wait for the markets to give us anything else right now. While we're waiting, I want to suggest to everyone who is listening right now, the way that they're doing the news events for tomorrow, like tomorrow morning, there's probably a bunch of other people that focus on the news events that are going to be doing something tomorrow morning. That's not me. I would suggest don't trade tomorrow at all, but they have this high impact news coming out tomorrow at 8:30 in the morning. Non-farm employment change the unemployment rate. Those are big news events. And they're going to shut the markets down 45 minutes later. So there's going to be a lot of change, pent-up change that's probably going to come out Sunday night when the markets open up at 6 a.m. on Easter Sunday. I just want to make you all aware of that. Be careful trading between now and Monday, or well, end of the day today and Monday. Okay. All right, so we don't have another trade here yet. The long-term direction is flattening out right here on the NQ, but that doesn't mean it's going to change. All right, down here in the ribbon, it's starting to change. Right here, it's flattening out, but it doesn't mean it's going to change. The ES, it never changed to bearish. Okay, so just have to trade what's in front of us. I wish I knew why it does that, but I don't. And it's just on both of my screens. Let's do it on the other one too. There we go. Okay, so I don't see any questions coming in yet. Here, I will put this in here. If you are listening in the live stream, if you're listening in the live stream right now and you want to see any equities or anything like that, now's a great time because we don't have any trade setups right now on the futures. Okay, or if you want to look at a different futures contract, if you want to look at like the yen or the euro or soybeans, anything like that. So, I was actually kind of curious about soybeans last night. I was thinking about it. We haven't looked at soybeans in a long time. ZS. Soybean futures. Here it is. Ugh. All right, so soybean futures are not looking real good here on the 4 range, but if you go back to the beginning of the morning here, right here they had some really good trades for soybeans. That's a huge move in soybeans right there, and you're able to capture it right at the top. Since then, the long-term direction has been flat, so there's really been nothing worth trading here since it gave that big move up here. Okay, either one of these, any one of these, when the long-term direction went to bearish right here, any one of these would have been a profitable trade. Okay, even that one down at the bottom, it went enough into profit to move the stop to break even. And remember, it's the beginning of the month, so we have more bean data that's going to be coming out. The grain reports going to be coming out. I think they're coming out in 2 weeks. I'm not sure about that. But go back to the gold futures here. And what were we on in gold? Excuse me. The M contracting gold. Okay, so the gold is dropping here, and we want to see it separate here to give us some bearish separation in long-term direction, but we're not there. There's something else that we have. I don't know how big of a move that was in the bean right there, in the beans and soybeans, but there's something that we used to give out, gosh, 10 years ago when I used to go around and do the seminars. Something that was peculiar about soybeans at that time, and Dwayne remembers this, but we had a list of important areas on soybeans that you could just pretty much keep with you. And it wasn't like the weekly trading zones come out. It was just kind of the rhythm to the soybean market back then. It's been so long since I've traded them. I want to look at them one more time and see how big that move was to see if it goes in sync with what I used to think. Right, let's just do this on the current contract in front. How big was this move? I think it was way bigger than what we used to do. 02. No, this is just right. It's still in sync, Dwayne. The same thing that we used to, 10 years ago with the soybeans. The same thing still works. The rhythm of the beans. Yeah.
November beans are the kindest beans of all.
They certainly are. November beans are the best beans. What we mean by that is there's more volatility in November beans because of the state of the crops and all that. But gold is what I'm looking at. Right, gold. It's this one right here. All right, so we've gone flat over here on the NQ. We've gone flat here on crude, and we've gone flat here on gold. So it's going to take a minute here to get us to trade, but hopefully it'll be worth it when it does. Okay. Yeah, so so that data that I was going over in here, subscription details, reload, okay, session disconnected. That data stuff that I was going over in here a few minutes ago, hang on, where is it? This one, add extra market data. While I'm waiting for the markets to go, I'll just show you more information here. This is all about TradingView. These exchanges right here, NYMEX, COMEX, CBOT, and CME. That's pretty much everything that we trade on right there. Pretty much everything that we trade on is going to be in there. Okay, as far as futures go. So that's really all you need to get real-time data. Okay. Gone flat here, we've gone flat here. We're looking to put in a higher swing on the ES. I don't know that we're going to get anything here. I mean, this is like pre-holiday trading. We have 15 minutes left in this session, and so we've had one stop out on the NQ. We'll see what happens, but I don't really picture another trade setup coming along right now. A lot can happen in 5 minutes. Let me see. I'm going back and forth with this person in Jake school. All right. Oh, nobody's asking any questions anywhere, so we're just going to roll with whatever comes our way. Look, we're starting to get a little bit of bearish separation here on the gold. So this is a pretty good leg down for the gold. All right, now the pullback's got to be just as deep, though. It's going to be a decent pullback, be like a 50% retracement of this move down, where to get us up to the ribbon. Okay, why was the NQ not a trade? The long-term direction is flat right here. And in a direction change like this, I want it to come down. I want it to change directions and then come down and hit a ribbon and then go. Not right in the middle. Okay. I mean, the fact that it's done what it's done right here, Martin, that's a good question. I mean, why wasn't this a trade? It gave an arrow and all that. Now, it's only given the arrow because it's looking right back over here. It's seeing this far back. But, you know, you're not going to get any more arrows. Like right down here right now, if this got to be oversold, we have bullish long-term direction, but it had to be oversold right now. You wouldn't get any white arrows because it's going to be looking right here now. Okay, so it's got to go a little bit further along before it starts giving us the arrow. And it didn't disqualify this one because it was looking just a little further back right here, like this spot right through here. You see how you don't have an arrow right here, a white arrow or a red arrow right here when it was overbought, and the long-term direction was still bearish. So it's trying to keep you out of these spots where the direction is changing like this right here. You know, where it gets choppy. You don't want to trade in those areas, right? That was one of the things that I was saying this morning when I was talking about the Logic 247 concierge trade alerts. Okay, I have those every day, Martin. I used to do this thing, and there was one guy that used to ask me questions all the time, Frank. God rest his soul. He used to ask me questions all the time, and they'd come out of the blue, and it was always good information. It seemed like stuff I wouldn't normally say. So the questions are where get the information. You never get the right answer if you don't ask the right question, right, Dwayne? And so
that is a very true statement that has stood the test of time. You'll
It
never
certainly
get the right
is.
answer by asking the wrong question.
And so I'm happy to give answers as long as I'm asked questions. And I'm reminded everyone again, partners meeting tonight, 8 p.m. Okay, I don't know how long it's going to be. It might be a quick meeting, but we'll see. And that again is based upon the questions that are asked. Okay. Well, no, it gave the arrow there because it did hit the overbought and come off of the overbought. So it gave the arrow. That's why it gave the arrow right there. It is actually a trade. It's just, you know, after you get the change, this is what I was saying earlier. After it changes direction, I like to see it come all the way back down and hit the ribbon and then go. That's what I was saying. When this happened, I'd like to see that happen in the flat area. It's not that significant in the flat area. But after it changes direction, it comes down and hit the ribbon and then goes, like right now, it's hitting the ribbon. So this would be a much more appealing trade to me right now. Okay, so I'll put it on. I'll show you how to put it on. It's got the low here of 44, so you can add 4 to that. It's going to be 48. Then add 1 more tick. Okay, so now, given what we know about this bar, it's got a low here. It's going to have a high at 48. And so I got my buy stop limit 1 tick above 48. And there it is. So when it closes up, it fills me at 48. And now when it goes to 8 ticks in profit, it automatically bumps my stop. And now I expect this is going to get up here to 55.5. And look, I already have a target up there. So I'm just going to let this run. I have one tick locked in right there, and I'm going to let it run and see what it does. Okay, I anticipate that it's going to get up here, and it should probably go through that. I won't know until it gets a little further up whether it's going to, but if I look over here, let me just slide this over a little bit. Okay, just look a little bit left on this. You can see right up here is where it should go, 59. Okay, so it should probably go through this all the way up to 59, but I'm just going to let this play. You don't like how I did it so effortlessly? That's the beauty of it. You know what's happening ahead of time. So you can just take advantage of it. Now I'm going to lock in a little more than 1 tick now. Okay, I'll lock in 4 ticks now. But I'm really looking forward to getting 30 out of this. It should at least give me the 30, and then I think it should actually go all the way up here to 59. But it may pull back and take me out at 4 ticks before it does. And if it does, it does. You know, at this point, we're up so far on the day, and it's the day before a holiday, so I'm just happy to be in here, showing people how easy it can be. And there, go, and you keep going. It's got a little bit of there's a little bit of selling pressure right here. Once it gets up above here, the next spot should be right up here at 55.5. Okay, and that'll be right there. I'm thinking it'll go through that 55.5 and probably take me out at plus 30. Okay, and there it goes. So I'm gonna lock in all that and get me. Go on, get it. There it goes, right through it. Plus 30. Let's see, that's the way it's done. Oops, this is the blue one. You see how easy that was? And you only need to do that 1 time a day. Just 1 time a day. Yes, Lori, he did 2 years ago. About this time. When COVID first came out, I think he got hit with it. He and Mike Reed, both about the same time.
And let us not forget John and Dr. Tom as well.
Yeah, John and Dr. Tom also. Yeah. Yeah, it's taking on a lot of our people. And so I said 59. Remember I said that a minute ago when I looked left? Right here is what I said, right? Remember me saying that? I did. And I pointed at it in the DOM. I said, I think it's going to go through. It's going to go right up to here to 59. That's what I said because I looked left. That's it. What I was saying this morning, the markets are always doing the same thing, right? They're going up and down, up and down, up and down, up. And now it's going down and you expect it to go up, right? As long as it keeps breaking the swing high, you expect it to keep going up. When the leg up starts to get smaller and the leg down starts to get bigger, then you start to be a little more cautious about trading. Okay. And I try to make you aware of all that stuff in the room in the morning when it's all happening. But one of the things, and this is in yesterday's lesson plan, I'll start it right here. We'll do this. Right here is our leg length. Okay. We'll do this as our leg length. And you see that up to there, up to there, up to there. What do you think is going to happen next? This was in yesterday's lesson. Okay, it's the same thing over and over and over again. If you guys want to learn, you just got to sign up for the trial and we'll teach you how to do it. And our indicators just guide you through the whole thing pretty effortlessly. Okay. No, no, Lori, he didn't. He was actually in a pretty good place back then.
And on the trial, there is no credit card required.
Right. No credit card required at all on the trial.
We invest our time, energy, and resources in you so that you can make a well-informed, intelligent decision if trading is right for you.
Okay, that was a lot of stuff for me to remember all at once. But basically, the trial is there and it's totally free for you to get in and watch us do what we do so that you will have the ability to make an informed decision whether you can do it or not. And if you have any questions during the trial, throughout the trial, if you have any questions about anything, don't hesitate to ask. If you want to talk to one of us, personally talk to one of us, like not in a meeting, but on a phone or through your own individual one-on-one meeting, we do that during the trial. Okay, all you have to do is just get in touch with us and let us know, and we'll set up time for you and talk to you while you're in the trial. Because I know, like I made that look really easy, right? I mean, I told you ahead of time everything that was going to happen, right? I'm pretty sure I did. And that's pretty much where you want to be. You only want to do that one time a day. You only want to be able to do that. You want to be able to do it multiple times, of course. That's the third time today I did that. 30 ticks on the NQ. But I know you want to be able to see that and read the market like that. And that's what the indicators are for. They're tools. They're tools in your toolbox. And you just got to know how to use them. Like, I don't buy tools unless I know how to use them or I have some immediate desire or need to use them. And I have a lot of tools. I'm not talking about these tools. I'm talking about tools in my garage. But these tools too, it's the same thing. The analogy is the same thing. You buy tools you want to learn how to use. And these are tools that we are willing to teach you how to use.
I bought my wife a new drill for Valentine's Day.
That was sweet. That was sweet of you. Yeah, I got Jada a new set of 100 nitro bits. Just kidding. I got that for me. But I go through a lot of drill bits. It seems like working on these projects with Jake and Jada. She came up with another project yesterday, a big one, like a boat project. And I don't know if we're going to go through with that. That's a big project because I want to use it right away. But anyway, so we're looking here for a pullback down into the ribbon. And if it does not get into the ribbon, whatever happens first, if this gets down into the oversold or this gets into the ribbon, right? We've got our higher swing in place. We just need to pull back, get to the ribbon, or for this to get to the oversold and give us a trade setup, right? There's just one over here that triggered on gold as well. Now remember what I said about changing directions. When it changes directions, I want to see it have a deeper pullback. This was a pretty deep pullback right here. Didn't actually hit the ribbon though, so you couldn't take it without having it be overbought. You had to have the down close after it was overbought, given the trade setup right here. Now, the structure of the market on gold is not so good that looks like a very appealing trade to me. I mean, it's a trade, but it's not, like a better trade would be, let me show you. I'm going to have an NQ trade area into in just a second, I think. All right, so let's go through this again right here. The bottom is at 49. So the top is going to be 4 points higher at 53. Put your buy stop limit on at 53.25, 1 tick above the top. Okay, and the bottom's changed, so you just got to add 4 points plus a tick. Add 4 points plus a tick. Okay, it's 48, going to be up to 52 plus a tick. I think the bar's going to close down, but it'd be up to 52 plus a tick is where the entry would be on that. And it might close up. 48 is the low, so 4 points higher is 52 plus a tick is 52.25. There it is. Now, this didn't actually come out of the oversold, so this isn't actually a valid trade setup. I'm in this a little early. It's not actually a valid trade setup, so I'm actually going to get out of it in a second here, I hope. It's not actually a valid trade setup until this comes out of the overbought. I'm sorry, until this comes out of the oversold. This is a valid trade setup then. Okay, it's not right here. It's not a ribbon trade because the black line is not in the green. Okay. So I hope I don't stop out on it because it's not a valid trade. It's a mistake if I do. And if it does pop up out of the oversold, that'll be a valid trade. And it looks like it's probably going to do that right now. I don't know. There it goes. There it goes. Okay, so now it's a valid trade. So I'm in at the right place anyway. Okay, so I'll let it run and do its thing. And it worked out to be a valid trade now. Okay, so after it gets 8 ticks in profit, it should bump the stop up to break even. And it should already have a 30-tick target on here, right there. Okay, and this will be my last trade of the morning. Win or loss, this will be my last trade of the morning. Or it's not morning anymore, but the morning started for me and it hasn't stopped. And this should make it up to here, to 60. Okay, so my target is at 59.75. Great how that worked out. You know why that's working out? It's because the leg lengths are the same all the way up. Remember this leg length right here? Where's this one going to go? Right there. Okay, so there's my stop being bumped up automatically. And so now we'll see if it makes it all the way up here. All right. I'm going to lock in a little bit more than 1. Okay, and there's quite a bit more than 1. There's more and more. That's 3 points right there, so that's 12 ticks. Okay, and there, should nail it right now. 16, 20, get it, get it, get it. Come on, get it. It's taunting me. There it goes, 30 ticks. Okay. Do you see how easy that was? And the gold is working out too. +4 on the gold. I never did tell you why the structure was off on the gold, but I can tell you that. Let me click this and do this. That was +4 on the gold. Let me tell you what I wanted to tell you, and then I'm going to wrap it up. Okay, so on the gold, what I was looking at was looking left on this is what I was considering. Looking left, we had a lot of buying pressure right here. That's what sent it up the last time. After you get a change in direction, I like to see a deeper pullback up toward the ribbon to take the trade then. So we just took 4 ticks profit on that. The thing that I was saying about the structures, I think the structure is limited right here until we start to break down below this level right here. Until we break down below 24.9, and we're limited in the gains, I think, right here. If we break down below 24.9, then we should be good for a ways, all the way down here to 21. Okay, that's what I was referring to when I said the structure is.
Or as John used to say, unless we start to break down, we're definitely going higher.
Yes, unless we start to break down, we're definitely going to go higher. Yes. Yes. All right. So we're going to end the session. We had 2 30-tick wins and 1 20-tick stop out on the NQ, and we had 1 4-tick gain on the gold. The other markets just didn't give us anything to trade with, so that's it. So hopefully it's been an educational session for everyone. And Gary, because you hit gold, you took that NQ trade with me just now. Oh, good. And you made another 180. Excellent. All right, so let me get back into here and see. Were there any questions or anything that came in the live stream? I don't think so. Was there? Nope. Nothing. All right, so if you haven't taken a free trial, let's go to mytradingiq.com, sign up for the free trial. Note right here, we didn't put in much of a higher swing, right? So the pullback is deep to want to go long. Right? Change of direction possibly right here. And the gold over here did not continue the move down. This is the structure that I was talking about. Okay. All right, that's it. I'm going to wrap this up for this session. And thanks everybody for coming in and hanging out. And if you have any questions, you can email us at support@cfrn.net or support@mytradingiq.com. And over the weekend, whatever, you can email us at any of those. And thanks for coming today. I'm going to wrap up the live stream right now. There you go. Okay, the live stream is wrapped up. So you can head pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am almost ready. Couple mouse clicks, getting them away. Oh, okay. Click that, and then I'll click that, and then I'll click this. And like magic, we're back in Phoenix, Arizona.
Like magic, there we are, back in Phoenix, Arizona.
Recap of the morning session.
Today it took 3 minutes and 2 trades to get to $1,180.
Smoking hot. Good job.
Yes, thank you.
Very good job. Okay, guys, we're going to take one last glance where the markets are. Okay, here's the S&P on the daily. Now, there's a great question asked. If this turns out to be a bullish engulfing candle, will that negate the bearish engulfing candle? My answer was no, because the context for the bearish engulfing was proper, but we haven't had enough of a downtrend for a bullish. Now, that doesn't mean the market can't still move higher. It can overcome that. I just would not put any significance in the bullish engulfing because the context is not right. So if you want more detail on that, just book a one-on-one mentoring session. Okie doke, looks like we did run up and hit on the ES. We already knew we hit the short target, and I said probably during the broadcast we'll hit the long target, and we did. Now, that didn't require crystal balls. It's just being able to look at the chart. I mean, if you can do what the market's doing, you don't ever have to learn anything else. Pullback holds more often than it doesn't. Price is always trying to get to a weekly trading zone from the moment the markets open Sunday night till they close Friday afternoon. Zone, zone, the zone, the zone. So what zone's it trying to get to now? Up here. But make sure you keep this area in mind. A previous any bearish cross that leads to an extended move, the first time price revisits that area, it will most likely be good resistance the first time up. And the opposite is true of a bullish cross. That's a bearish cross. Red line crosses the green line. Bullish cross, the blue line crosses the green line. So if price comes back down into this area, we would expect support. Okay. All right. That's the ES. The Dow stuck at the zone. Yesterday resistance, today resistance. Now we've been consolidating for an hour and a half at resistance. But our traders knew that area would be resistance Monday morning at 6:15 a.m. Eastern. Russell, still trying to get to the long target, and it's just got to overcome this swing high, and this swing high, and this one, and this one. And I got blue and climbing below. Once blue and climbing crosses the green line, BBC, it just stands for bull bear cross. When price crosses below the green line, we're bearish, anticipating lower prices. Now, when did that happen? That happened way back here. See, this is Thursday, Wednesday, Tuesday. We didn't get a bullish cross until this morning. And then we got choppy. This is typical pre-holiday trade. NQ making a run at that target. Okay. Looking left, you got no obstacles all the way to the target. 13,170 to 13,205. 35 points at $20 a point, $700 per contract traded. You've earned the right to trade 10 contracts. It's a $7,000 move. But when you come aboard, you don't start trading real money right away because you haven't learned the strategy yet or how to read the chart or the indicators. You start in Sim. You put together 10 consecutive days in a row in Sim where you reach your goal in 10 trades or less. Then the 2420 blueprint will give you the green light to go live with one contract. Now that you're trading live with one contract, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is the first contract is funded with your startup capital. The second contract is funded with profit you earned in the market. Blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10. It stops at 20. It's called the 2420 blueprint because it's designed to help you to go from 1 to 20 contracts over a period of 24 months. Definitely not a get-rich-quick scheme, but you're building a business here. You're learning a life skill that will serve you well all the days of your life, as long as you want to trade. Okay? And again, there's no secrets here. It's all purely logical, as Spock used to say. Crude oil kind of flatlining on us after that huge gap up Sunday night, which one of our members, Stefan, gave us the heads up, I think on Saturday. Guys, when the markets open Sunday night, look for a huge gap in crude to the upside, and boy, did he nail that one. Okay, what else? Gold. Gold's asleep at the wheel at the short target. Silver. Okay, it attempted to make a run at the long target, but what did it do? It ran into previously established resistance. Once resistance is established, it will remain resistance until broken, or Jesus comes back. Same with support. Once support is defined, it will remain support until broken. If you ever wonder, man, I don't understand why I got stopped out. I don't. The trade was going in my favor, man. I was doing the happy dance, and then all of a sudden, I got slammed. You probably didn't look left. When you teach your kids across the street, right? Tell them to look both ways. But when you're trading, you look left. Previous swing highs will most likely be resistance. Previous swing lows will most likely be support, at least the first time they're touched. A little bit of information right there could change your whole trading world. All right, if you want to become a part of CFRN, lifetime membership, no recurring fees, no upsells, no nonsense. Go here to eminifuturestrading.com. And this will become your all-access pass to everything we do, everything we've ever done, and whatever we do in the future, without you spending another time. 9 out of 10 new traders fail because they don't have a teacher. That's why we put so much importance on our live training room. Every trading day, 2 hours, 9:30 a.m. to 11:30 a.m. Eastern, and it's an interactive environment where you're able to ask questions for Michael or Valerie or whoever's putting on and taking off trades. They're explaining every move they make, every trade they take, and the rule behind it. It's rules-based trading. Okay? Once you understand the rules, you're ready to go out and conquer the world. Along with the live training room, you get unlimited one-on-one private mentoring. Strategy we teach you and the indicators that you own for life are fluid across all markets and all time frames, because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. You'll also receive the Logic 247 alerts around the clock, Concierge Trade Alert report each night when it's published, and you'll have access to the members-only workshop every Thursday night. Plus, you'll enjoy around-the-clock support via our many Telegram channels. All that and so much more. Everything a trader needs, all under one roof, one low price. EMiniFuturesTrading.com. If you have a question, call 949-42-EMINI or email us support@cfrn.net. And that takes us to our good word for the day. Start fresh every day. Proverbs 14:17 says, "A quick-tempered person does foolish things." You overslept, the car wouldn't start, you're late for work, your computer crashed. These things can make you angry, but only if you let them. Nobody has the ability, or no thing has the ability to make you mad. Only you have the ability to be mad. Now let that sink in. Solomon said, "A quick-tempered person does foolish things." So if you fly into a rage, expect a rough landing. The Bible says, "He who is slow to anger is better than the mighty, and he who rules his spirit than he who takes a city." Proverbs 16:32. Anger always comes back to bite you. It ends up doing more damage than the thing that triggered it. David said in Psalm 5:3, "My voice you shall hear in the morning, O Lord. In the morning I will direct it to you, and I will look up." Start by offering your day to God. Then you will be less likely to react in anger when things go wrong. Our time here on earth is short. What a shame to let something that happened 20 years or even 20 minutes ago ruin your day. Make up your mind to enjoy every single day, because there is no promise of tomorrow. You might make mistakes. Things may not go your way. You may be disappointed. But choose, make a conscious decision to live a happy life rather than let what does or doesn't happen steal your joy. Every morning, say, "Father, this is going to be a great day. I thank you that I have discipline and self-control and that I make good decisions." I may not have done what I could have yesterday. That day is gone. I'm going to do better today. Ever wonder why a car's windshield is big and its rearview mirror small? Because what's behind you isn't nearly as important as what's ahead. So keep looking ahead, and no matter what happens today, don't let the enemy steal your peace. Jesus died that you might have peace that surpasses all understanding. So however you and your family celebrate the Good Friday Easter weekend, I wish you all the very best. Again, we'll be off tomorrow, but we'll be back Sunday night. And I'll be working tonight. There'll be alerts coming out tonight. But once the markets close tomorrow, I'm done. And then we'll be back Monday. Do it all over again. And because there's no Monday holiday here in the U.S., as there is in many countries, the weekly trading zones will be out Monday morning, God willing, 6:15 a.m. Eastern. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.